On to here on Squawk Asia and looking at what's going on with the yen against the dollar, 9.392. Let's call it practically a 94. So what we've seen just ahead of the G20 is trading, well, basically, okay, I'll do the math for you. We've seen the dollar lose about a yen and more from just before the G20. And what happened over the weekend in Moscow, basically, apparently a free pass for Japan to continue doing what it's doing, or at least continue talking about what it says it's going to do. Stephen Nash is Director of Strategy and also Market Development at FIIG Securities, joining us live from down in Sydney. Is this a free pass for Japan, Stephen?
Look, I think the market to some extent is anticipating what the Japanese government really requires here in terms of the yen. Probably getting a little bit excited about Japanese growth. Last week we had a GDP deflator of -0.6. I mean, really, you know, there's a long way to go, a lot of work to do before we get decent growth out of Japan. Getting excited about Japanese growth, you know, has been a losing trade for many years now, but at some point we're going to see a revival in Japanese growth, and it would be great for global growth if that was to happen. However, I think getting too bulled up on it right now is probably the wrong way to look at. The market's already done a lot of that for you in terms of the yen and the Nikkei, so we'd expect some sort of correction to this move in the yen and also to the Nikkei at some point.
Oh, okay.
Stephen, do you think the comments from the Abe government have been somewhat excessive? Some people point out, you know what, this is a young government. They're still feeling their way. And do you think investors should perhaps take what they say and all of those promises with a grain of salt?
Exactly. I think you know, it's good to see some strong policy action and discussion of changing the inflation target for the Japanese economy. I think that's a good idea in this current environment. The Japanese have been struggling with deflation for a long time now, but investors really have to be on their toes here. We've had a significant rally in the Nikkei. We've had significant moves in the yen. Question is, where is the growth? And I don't think at this point we're really seeing much. We will see it at some point, but to some extent the markets have really jumped the gun, and we should see some correction. And yeah, I think taking the pronouncements with a grain of salt is the right way to approach it. Yeah.
All right, so the JGB market, Stephen. I mean, this is your area of fixed income. Do you have any sense of being uncomfortable when it comes to Japan managing to pull off what they're promising and keeping their bond market stable?
Look, I think the bond market for the Japanese is crucial to their ongoing economic performance here. Managers have been concerned about the Japanese bond market since 1999. You know, people have been trying to short that market. Really, again, a very a losing trade here. We anticipate that the Japanese will try to control sentiment in that market and make sure that yields aren't rising too much, because obviously rising long-term yields are going to slow growth, and that's something that the Japanese really don't want at this point. Obviously, there's a very large debt that they have to service, and to keep that manageable, I think rates have to stay low. With the domestic savings the Japanese have, obviously that can help control the JGB yields. I can't see a case for substantially higher JGB yields right now. With the pro-growth stance of the government, that is more a medium-term outlook. So in the short term, I'd imagine that JGB is a reasonably good value right now.
So, Stephen, let's talk a little bit more about this call you have that the Nikkei as well as the yen are going to correct. You've said it twice already, so let me hold you to that. Yeah. What's the trigger going to be? How steep is the correction going to be?
Look, you know, typically markets buy the rumor, and that's exactly what they've done. You know, there's been discussion of pro-growth policies. Markets got excited about it. There are a few meetings on at the moment. We may get some announcements from that, but I imagine the market will do it itself in a lot of ways, because I think market participants have probably got themselves a little bit overexposed to Japanese equities, and you know, if there's no developments in terms of growth in the short term, those positions will start to look a little bit optimistic. And I imagine that, you know, it's difficult to say exactly what the trigger point will be, but markets have already exposed themselves to this risk, and I think it's a matter of time before we get some sort of correction going.
Okay, Stephen, thank you so much for joining us today. Good to have you on the show, as always. Stephen Nash there
Thanks very much.
of FIIG Securities joining us from Sydney. Well,